Hey, I'm Russ, and we got dividends coming up. When we invest in companies for dividends, we want to make sure that their revenues or the top line, that they consistently have a lot of cash coming in the door. We want them to have lots and lots of money and sales coming in the door that will trickle down to pay out the dividends that we as dividend growth investors love to receive. And when we invest in pharma stocks, we want to make sure that they're going to keep those revenues growing and have money coming in. So something that I don't really hear talked about a lot, and I wanted to do this video for all of us that invest in big pharma, is to be aware of some of the blockbuster drugs that are going to be hitting the patent cliff this decade. Now, a blockbuster drug is a drug that has over $1 billion in revenue in an annual year. So we're going to look at the top 10 blockbuster drugs that will be falling off the patent cliff this decade. Hey, what's up? I'm Russ. Thank you for making me part of your investing journey each and every week, where we talk about dividend growth investing here on the channel and allowing me to share some of my nearly 20 years of investing passion with you. So if you like, you smash. And now on with the show, getting on with the show. Come on, baby. Let's get it on. So this decade, we will see several drugs taking the plunge off of the patent cliff. Straight from the FDA's website, patents are a property right granted by the United States Patent and Trademark Office anytime during the development of a drug and can encompass a wide range of claims. Exclusivity refers to certain delays and prohibitions on approval of competitor drugs available under the statute that attach upon approval of a drug or of certain supplements. Now, periods of exclusivity and patent terms may or may not run concurrently. So in a nutshell, a patent is property rights where exclusivity basically is protection from generic competition. And how could this affect a company when the patents expire? In 2018, AstraZeneca saw a 19% drop in revenue and a 50% fall in earnings per share. Also, Merck's asthma drug named Singulair saw a decline of 90% in sales after its patent expired, as over 10 generic substitutes filled the market. So patent cliffs expiring can really put a dent in sales and earnings per share. So this is something that everyone who invests in big pharma needs to be aware of, especially when their blockbuster drugs are going to expire. So imitators still need FDA approval for their biosimilars or the generics. And what this does is it really forces companies to diversify, which limits their dependence on blockbuster drugs. Also temporarily lowers the drug price, prevents market monopoly, and is a growth opportunity for those generics that are the little guys now but want to be big guys one day. Full disclosure, I don't invest in Bristol Myers Squibb, ticker BMY, but they do indeed stand to lose the most from the patent cliff this decade. Now, most of this was taken from a fantastic Fierce Pharma article, which is linked in the description below, and I would highly suggest that you read it. They gave a lot of good information in there that affects us all as investors. The number 10 spot with $5.3 billion in 2020 revenue is Merck's type 2 diabetes drug, Januvia and Janumet, and has had recent sales drops and will lose its patent in 2023. Yeah, so Januvia and Janumet have been dropping in revenue lately, so it's kind of out the door anyway for Merck. So they're going to have to make up that $5.3 billion somewhere else. And full disclosure, I do invest in Merck. Number 9, at $5.4 billion in 20 revenue, is Pfizer's breast cancer drug Ibrance, which is set to expire in 2027. Pfizer's going to look to restock that pipeline by buying cancer specialist Array in 2019 for $11.4 billion. Now, I always say it that these companies in any industry and sector are living, breathing entities, and the first order of any living and breathing entity is survival. So it's going to be interesting to see how these companies try to pivot and merge and acquire and spend on research and development in their pipeline. Number 8, at an estimated $6 billion, is GlaxoSmithKline's HIV drug Dolutegravir. Now, their molecule patent expires in 2027 and the crystal form expires in 2029. Now, they've got a few years until those patents expire, and what I've read in the article is that they're really placing their bets on long-lasting injections over daily pills going forward, and I do not currently invest outright into GlaxoSmithKline. Number 7, at $7.0 billion in 2020 revenue, Bristol Myers' advanced lung cancer drug Opdivo, which expires in 2028. Now, by 2026, analysts think global sales could reach $11.75 billion. They recently acquired Celgene, which has 5 drugs and 1 in their pipeline analysts think could contribute $15 billion in peak sales. So they're going to ride this one, and Bristol Myers has until 2028 until Opdivo expires, but they're obviously open to mergers and acquisitions, and their CEO has said as much. Full disclosure, I currently have no position in Bristol Myers Squibb. Number 6, at $7.7 billion, is Johnson & Johnson's psoriasis and Crohn's disease drug Stelara. Now, J&J says this will expire in 2023, but analysts think it's more like 2025 to 2026. Going through this article, I found it really interesting how many times that all these companies, they're constantly suing each other, and they must spend a fortune in litigation that, hey, they should pay that out in the form of dividends. But you know what? Again, they're all entities. They're all trying to survive and keep being top dog in their sector. And I do own Johnson & Johnson, which is one of my top 3 favorite dividend stocks. And number 5, with $8.36 billion in 2020 revenue, is Regeneron and Bayer's diabetes drug Eylea, which expires in 2025 to 2026. Eylea grew 7% from 2019 to 2020, but they have a lot of competition for that drug, and several biosimilars are lining up to grab a piece of that $8 billion pie. And I currently do not hold a position in Bayer or Regeneron. Number 4, with $9.2 billion in 2020 revenue, Bristol Myers and Pfizer teamed up to create the clot-fighting drug Eliquis, which expires in 2027 to 2029, and they have fought off 25 companies filing for generics. Now, analysts think that Pfizer could lose up to $20 billion in revenue starting in 2026, and Bristol Myers Squibb says that they see generic competitor entry after 2026, but before 2031. And analysts, though, think that it'll be more like 2027. Number 3, at $12.1 billion in 2020 revenue, again, Bristol Myers Squibb hitting our list with their multiple myeloma drug Revlimid. Imitators are going to be able to hit the scene unchecked in 2025 to 2026. But look out for India's Natco Pharma, which could roll out their imitator in limited quantities in March of 2022. About a decade ago, Celgene first launched the pill at $215, but more than 20 price increases have it at $750 a pill. That drew the eye of congressional investigators, and as I always say, again, these companies want to survive, so they're going to do what they have to do for that survival. And Bristol Myers Squibb, if you weren't aware, acquired Celgene in 2019 for $74 billion and Myocardia in 2020 for $13.1 billion. And the number 2 blockbuster drug facing the cliff this decade at $14.38 billion in 2020 revenue is Merck's cancer drug Keytruda, which falls off the cliff in 2028. So Keytruda accounted for 30% of Merck's 2020 revenues, and as we will see, could push for top dog very soon. And Merck's CEO Rob Davis, who is the head of that living, breathing entity, has said that Merck is, quote, open to any opportunity to add a meaningful asset. So again, Merck knows that they need to keep that pipeline open and flowing. They're going to eventually have to replace Keytruda, which is the number 2 blockbuster drug in the world. And they recently spun off Organon, which is women's health. And from that, they got about $9 billion in cash. So they're going to be able to put that toward research and development mergers and acquisitions. And they're going to try and grow the company even more. Again, which would be good for me as an investor in Merck. And the #1 blockbuster drug facing the patent cliff this decade, clocking it at $19.8 billion in 2020 revenue, is AbbVie's rheumatoid arthritis drug Humira, which expires in January of 2023. And it accounted for 43% of AbbVie's 2020 revenue. Now, they reached a deal with Amgen, which is going to be able to bring in their copycat in January of 2023. And they also reached agreements with about 8 other companies that are going to be able to release their copycats. Now, AbbVie's already been feeling the sting of the biosimilar competition. In Europe in 2018, Humira had those competitors that released. And from what I saw, over the course of 2019, Humira's sales were down 31%. Ouch. Now remember, AbbVie, they're going to fight. So the best way that these companies do this is to just buy these established companies with established drugs, and they can just add them into the system, just plug them in. And remember that AbbVie bought Allergan. They acquired them in May of 2020 for $63 billion. Now, Moody's expects to see between $5 and $20 billion in deals, mergers, and acquisitions in the years ahead, and particularly in the fields of immunology, oncology, and gene editing. Hey, think about CRISPR. I like CRISPR, and they are down 50% year to date, and I'm very close to starting a position in them in my tax-advantaged account. So as investors, what do we need to do? We need to keep an eye on their revenues, on their cash flow. How much are they spending on research and development and mergers and acquisitions? We're going to see some names splash across the headlines in the coming years. It's just the way that it is. They know these patent cliffs are coming, and we just need to be aware of it. It may be okay. They will develop other blockbuster drugs to replace the ones that they're going to lose revenue on, but this is just something that you need to be aware of if you're going to invest in big pharma companies. Well, I hope you found this video helpful, and if you would like to see the top pharma dividend stocks that you can invest in right now today, check out the video we did right here, and I will see you there.